Hey traders, what's going on? Jason here from Leavitt Brothers. I'm going to do something a little bit different this week. In previous weeks, I outlined what I was looking for to determine whether the market was healthy or not, okay, whether the overall uptrend was likely to stay in place or reverse. The indicators have been very good to us. It's why I stick with them. Today, I'm going to talk about longer-term setups that I'm interested in playing. Okay, I'm operating under the belief that the market is strong and healthy, and the uptrend will remain in place, and new highs will be made. So I think the S&P not only trades up to 3,000, but likely goes well beyond that. Okay, in the near term, things are different. We can get a bottom, we can get a double bottom, and double bottoms could be separated by months, sometimes 6 months, 8 months. So we might not get the second bottom of the double bottom until into the summer. Who knows? So near term, things are questionable, but overall, I like the market and will continue to favor the upside as far as longer term trades go. Okay, so in this video, I'm going to talk about longer term trades, longer term setups. Okay, these are stocks that they just look fantastic on a longer term time frame, and they're stocks that maybe we could hold for 6 months, 12 months, if indeed my thesis is right that the market is still in a big uptrend and is going to continue for the foreseeable future into next year. These are charts that I'm really interested in playing. So what am I looking for? I'm looking for great looking weekly charts. Some will be coming out of long bases, others will be in resting periods within uptrends. Okay, let me give you a couple examples from last year, and then I'll show you many of my favorites that I'm looking for going forward. Okay, so Apple is a trade of ours from last year. Got above its 30-week moving average. This is a weekly chart. Got above it, came down and tested it, came down and tested it again, and obviously it's been trending up ever since. Okay, this was like a year-long hold for us. It paid us very well. There were some stocks out there that on a percentage basis moved more, but for a big cap company that's relatively safe, this was a great trade for us. It lasted a long time. Amazon is another one of ours from last year. Got above its 50-week moving average, tested it there, consolidated for many months, got above resistance in the mid-800s. A lot of choppy period here, a lot of time where the stock just sits in place, but as long as the stock is above its 50-week moving average, we're willing to hold on, and obviously it has paid us very well. It's almost doubled since our initial entry. Netflix is another longer term trade of ours. It based for about 18 months, got above resistance, rode its 30-week moving average up while touching it a couple times, and then at the beginning of this year it seems to have hit an inflection point and has gone all the way up to almost 300. Okay, so this is what I'm looking for. I'm looking for a really good looking weekly chart. Okay, let's go through them. I have a lot of charts to cover because there are a lot of stocks out there that look really good. If I find myself talking too much, I may cut this short, but I think this will give you an idea of what I'm looking for, and probably give you some things to chew on as we go forward. Okay, Auto Home, great looking chart. Support, found support at the 30 here, tested it here, rallied up, consolidation pattern. Now it's consolidating at a higher level. This chart overall looks fantastic. Is it going to go 3x again? I don't know. I'm not banking on it, but a measured move from this 15-point pattern would take the stock up to 100. A measured move from 55 up to 85 takes it over 100. Okay, so in my eyes, this is a great looking weekly chart. I'm looking to buy a dip within the pattern, and who knows, if we get 2 more months of sideways movement and the 30-week moving average comes up and scoops up the stock, it'd be a no-brainer to get in, put a reasonable stop in place, and let the thing go. BHP, this was a $100 stock, several years ago. Okay, obviously it's been trending up nice and steadily. Some good consolidation patterns. I mean, if I can put on, you can see consolidation here, consolidation here. Now it looks like we're consolidating at a higher level. As long as we maintain this higher level, okay, and we don't break down too much, I'll consider the trend to be up, and this stock could be viable on a shorter time frame. What I do is I look at the weekly, I like the trend, and I'll zoom in with the hourly or the daily to find a better entry. Okay, so right now, as long as it could base at a higher level, it remains on my list. Okay. Career Education Corp. I'm not going to play this one. I don't like the way it looks. When you look at periods like this where the stock goes week after week after week, trading in a teeny tiny range, I don't know what to do with that. Okay, so obviously the overall trend is up. Me personally, I don't know how to trade a stock that trades so many weeks in a row where it doesn't move, but the trend is up. Maybe some of you guys like it. Maybe you get a pullback and you can get a decent risk reward. Okay, great looking chart. I don't know how to trade it though, so I'm just throwing it out there for you. Commercial metals, kind of a sloppy pattern here. Okay, you got a consolidation pattern here. Now it's basing at a higher level, which is something I look for. Okay, I don't know where the entry is. Okay, you got a lower high here, or you got a lower low here, you got a higher low here. I don't see a pattern necessarily setting up. I just know that this stock based for many months, it broke out. Now it's basing at a higher level. Okay, so that tells me something. It tells me the stock's good, it's healthy, it's doing well. I don't know where the entry is yet. Several more months of sideways movement will probably reveal that. So I'm just throwing it out there as an idea. Like I'm not ready to play it yet. I don't know how to play it yet, but it's something that's on my radar for the future. CNX, big base, obviously just broke out this week. This week's been a good one. It's got resistance up here at 20. It's got a little bit more resistance up in the low 20s. But if it can clear that and inflation actually does tick up, this stock can double. This stock can go up to 40. If inflation ticks up a little bit, 30 is very realistic. If inflation really ticks up, 40 is could happen. It won't happen overnight, but it certainly, as a longer term hold, could happen if the inflation story actually plays out. Deere, doing great, obviously trending up. It's doubled over the last, 18 months. Obviously it's got a nice, this is what I call it's a higher base, okay? Stock moves up, it bases, you can see it happened here. Okay, stock moves up, bases at a higher level, breaks out, bases at a higher level. So as long as it can maintain itself in this base at a higher level, it's on my list. Okay, great looking trend, great looking weekly chart. If the 30 comes up here and can meet the price as it comes down to the bottom of the base, and market conditions are conducive at that exact time, we can get a nice entry. Discover, same thing here. We got a base here, broke out. Now we're forming a base at a higher level. Okay, the 30 has been so-so. I mean, it acted as support here. Yeah, I guess you can say support here, and then when it broke, it actually broke hard. But as long as this thing can consolidate at a higher level and the market stays healthy, it'll be on my radar. Okay, maybe the market double bottoms later this summer, and this stock just trades sideways in a range for a couple months. It'll be perfectly fine. Okay, be perfectly fine. The depth of this base measures up about 8 points, which would be about 10%. And if you look at the move from the high 50s up to here, then I think we go to 100. So if the market is healthy, and if we get a double bottom and the market remains healthy, this stock could rally to 100. eBay, everyone forgot about eBay because they're not one of the big juggernauts anymore, but the stock is still doing well. The stock has doubled over the last, 18 months, 2 years. It's been riding its 30-week moving average. Obviously, it's got a support trend line here. I'm not going to play a breakout, but if we get a pullback, if the market does a double bottom and eBay kind of drifts sideways and down a little bit, and we get a chance to buy a dip, I think it'll be a decent, it could be a decent one. It could rally up to 50. EC, part of the oil group. I always hesitate when a stock is doing so much better than its peers because I wonder how could it do that. But obviously the chart looks great. Broke out at $10. We had it on our list back then. It doubled. Now it's consolidating at a higher level. I don't know how long it's going to need to consolidate, but as long as it can consolidate at a higher level and no downside damage is done, I do think it will be playable. Whether oil stays up, whatever happens, the market remains healthy, whatever's going on in this stock that's specific to the stock, as long as it remains in place, this stock could break out at 20 and rally easily into the mid-20s. Freeport McMoran, fantastic looking chart, grinded itself up. We've played this stock a couple times. We played it back here in 2016 when it broke out. We also played it here, 2017. It's done fairly well. Okay, like overall, it's kind of doubled over the last year, although it's been pretty sloppy. But now it's trading, again, what I consider to be a base at a higher level. And as long as it could maintain this box, then I think dips within the range could be buyable, and eventually, if the inflation story plays out, if the dollar remains weak, the stock could break out at 20 and easily get up to into the mid 20s, maybe even to maybe as high as 30. Okay, great looking long-term chart. Everything's in place. I like this one a lot. Okay, as far as short-term trades, I should throw this out there that when I engage in short-term trades, I'm doing short-term trades from my long-term list. Okay, I'd rather do a day trade in a stock like this, which I like on an overall basis, rather than just having a basket of stocks that are moving up and down. Nothing wrong with that. I know a lot of day traders who do that, but when I engage in short-term trades, my list is my long-term list, and I'm looking for the best short-term setups within that list. GGB, great looking chart, moved up, consolidate for more than a year, broke out, consolidate again, broke out again. To me, this is just a fantastic looking chart. Who knows? I mean, this stock can go up to $8, $9, maybe 10 if things really get moving. Excuse me. High Crush Partners moved up, moved down, base for several months, got above a resistance level, and now it's testing it. Okay, so right now, as long as this stock could base at a higher level, I would consider it to be in good shape. Okay, if it breaks down, takes out its 30-week moving average, then all bets are off. But for now, as long as it could base at a higher level, it's a stock I'm interested in. Hibbett Sports, big move down. Stock lost a huge percentage of its value. Now it's moving up, consolidating within a newly formed uptrend. Not a great stock, not a great company, not a great anything, not even a great industry to be involved in, but a pretty good looking chart on a short-term basis. I mean, this definitely gets your attention. So even though if you're thinking like, hey, it's only a retail stock, well, obviously there's some big players who are buying, because look at all that volume. So this is the type of stock that I'll buy a dip within an uptrend, if the conditions are right. I'm not looking for a huge move, but certainly a 20% move is very doable. Harmony Gold, big move down, base for many months, just popped out of the base on two consecutive weeks of high volume. Now it seems to be basing in a little pattern again. So if gold could right itself and move up, then the stock will probably do well. Whether it can run without gold, I don't know. Follow the chart, I guess. Personally, I'm not that interested. I don't like buying cheap stocks. I'd rather buy a more expensive stock that has truer movement than a cheaper stock that I have to really size up in, and you get, just the percentage moves are just too big. So I'm not going to play this one, but you might like it. MindBody, great looking overall chart, moved up, consolidate here for several months, broke out last week. Timing not very good because the market's weak this week, but overall the chart looks fantastic. So as long as it could maintain itself, obviously it couldn't hold the breakout, but as long as it can maintain itself about within this box, then when the market is ready to actually leg up, this stock should do well. It's pretty volatile too, so getting a 20-30% move is I don't want to say a no-brainer, but very, very doable. MKSI, I'm going to start talking either a little bit faster or shortening my comments so this video isn't too long. Obviously, big trend up, consolidation, tried to break out, but like the last stock, like MB, timing just wasn't right. It just wasn't right because it broke out at the time that the market was about to roll over. So, great looking chart. I'll be buying a dip if I get the chance. Momo moved up, moved down, based for several months, broke out last week, and now it's just resting while the market figures out what it wants to do. As long as we, if this thing could base up here and not do a whole lot of damage while the market figures out what it wants to do, then I think we could, go back up and test these highs. MT, steel stock, looks fantastic. Moved up, based, broke out, now basing at a higher level. Everything looks great with this stock. Inflation ticking up, commodities starting to do better. This one, that's the theme, that's the story. And as long as that remains in place, a lot of these steel stocks will do very, very well. Nucor steel stock also, okay, same thing. Consolidate, breakout, base at a higher level. As long as the inflation commodity story remains in place, this stock will do very well. Sprout Farmers Market, big base, okay, double bottom spread out by several months, okay, kind of a wide base, which is nice, about 8 points. Broke out at the beginning of the year. Now it's coming down and testing that level. If it can, if it could kind of settle in here and hold these gains, then I think eventually this box resolves up and we go up into the 30s. So if you're looking for a fairly safe stock as opposed to a higher volatile stock, here you go. Shopify, this has been on our list a few times. Okay, just a trend, moved up, consolidate, moved up, consolidate. It's done really well. I'm not going to chase it higher, but hey, if the market double bottoms and we get a chance to buy a dip back to the low 100s, I think that's a good entry. Snap, obviously been made a lot of fun of. It's not done well since it went public, but it's improved a lot recently. Okay, so it moved down, based for a few months, and it broke out on huge volume. Now it's basing at a higher level. So if it can maintain this level, if it can prove that this breakout here was not a fluke, but if it can maintain itself at at a higher level, then I think this thing breaks out again and goes up to mid-20s. Am I going to play a breakout? Probably not. I'd prefer to buy near the bottom of the range with a tight stop. Okay, I'd rather take paper cut, and then nail a big move rather than buy a breakout with a stock that has such a wide range, and then you have to put a stop further away. So maybe the corner is turning here. Maybe it is. You never know. Certainly on a percentage basis, it's got a lot of upside potential. Square, one of my favorite looking patterns. We've played this stock at Leavitt Brothers a few times over the last year. Okay, right now it's consolidating. So love the stock, love the company. Everything looks good here. Okay, if the market does a double bottom and this thing could drift back down to the bottom of its range, maybe even meet its 30-week moving average, I'd consider that a gift. I'd buy that and put a stop in place and just let it go. If the market does, if the S&P does move up again, make a new high, if the S&P goes up to 3,000 or above, this stock could easily go 50%. I mean, it could go from 50 to 75, and if you get a good entry down near the bottom of the pattern, that would be a 100% move. TAL Education Group, obviously great looking pattern, moved up, consolidate, broke out, nice volume, pretty good volume here in the pattern, but not great volume on the breakout. So again, I'm just looking at this saying, hey, it broke out, now it's resting, it's consolidating. It's got to kind of churn itself a little bit. So as long as it can maintain itself in a base at a higher level, then it becomes an interesting stock to me. Tech Resources, fantastic looking chart, moved up, base at a higher level, broke out, and now it's basing again. Okay, everything about this chart looks good. As long as it can maintain itself, I'll give it a little wiggle room. If it goes below the former resistance level, that's fine. But as long as it can maintain itself in a base at a higher level, it's on my list. Okay, a measured move takes it up 4 points, not a big deal. But this move from 20 up to 30, that measures up to 40. And some of these commodity stocks can move really fast if indeed the dollar keeps falling and commodities continue to heat up. TS, big wide range. This stock was much higher in the past. Okay, it's just an example of a stock that fell a lot and has the potential to rally a lot because of it. Big wide range. I'm not playing a breakout, but if we get a dip back here to the 30, okay, the 30 act as support here and here, kind of act as resistance here, kind of support here. So if we get a dip here and the 30 scoops it up, be a good entry with a tight stop. And then, the target at first would be the top of the range, and if the range gets taken out, then you could ride it. A couple more here. Take two, big rally, consolidation pattern, kind of messy lately. It broke out and then got hit after earnings. Now it's just trying to find itself in the range. As long as it can trade within this range, I'll consider it to be playable. Twilio did great after it went IPO, got crushed, been basing for the last year, got obvious resistance level at 35. Maybe it's fixed itself. Maybe there's too much hype after the IPO. I don't know. But whatever the case, it's been basing for about 15 months. So if it could break out here, the size of the base measures up at least 10 points. So not bad. United Technology is another example of a stock that moved up, based, and now broke out and is basing at a higher level. As long as this stock can maintain itself in this box that I've drawn here, to me it's playable. Vale, okay, we've played the stock a couple times at Leavitt Brothers, broke out here at 6, rallied up, then it formed an even bigger consolidation pattern, and then just broke out recently. Okay, the trend is up, so I'm going to stay in, and I'll add to my position on dips and such. Overall, the chart looks fantastic, and again, if the inflation story plays out, the stock will go much higher. All right, that's it. Come check us out at Leavitt Brothers. For a small annual fee, we'll save you a ton of research time. Okay. Our weekly report discusses the long and short-term trends and the staying power of those trends. Is only $149 for the year. And our sector breakdown and trading ideas report, which offers many trading and investing ideas from the market's leading groups, is only $2.99 for the year. One good trade pays for your subscription for the entire year. All right, good luck, and I'll see you next time.